Good morning, everyone. I'm David Paul. I'm the Managing Director of VectorVest here in the UK. I want to talk this morning about worry-free investing, which is the VectorVest most conservative trading plan. And I'm going to try and talk you through that over the next couple of minutes. First of all, I want to look at the UK overall market, and that chart you should see in front of you is the VectorVest composite of the entire UK market, the 2,200 shares that we follow on the LSE and AIM. It's an equally weighted index, and the red and the green triangles that you should see represent the longest measure of the trend on VectorVest, which are known as confirmed calls. And in October 2019, we got a buy signal, and then we got a sell signal just before the COVID collapse. We got a buy signal on April the 27th, 2020, this year. And then a little bit of turbulence a week or so ago. As I'll mention a little bit later on, the shares that we were holding in our worry-free portfolio, none of those got stopped out in that little bit of turbulence that occurred, at the start of November. So as we go into the trading day today, the trend, the long-term trend that we use for worry-free investing is up. Now, in worry-free investing, ladies and gentlemen, we look and invest in the UK's safest shares, those shares that have got a history of growing earnings safely. And on VectorVest, we have a measure that looks at the safety and the predictability of the earnings. It's called relative safety. And it looks at those things that I've got on the slide, but in essence, what the VectorVest algorithm does is that it looks at the balance sheet, the income statement, the cash flow statement. It looks at margins, looks at dividends, dividend safety. It looks at sales, all those accounting ratios, sucks them all in and spits out one number which represents the safety and the predictability of the earnings. On worry-free investing, we actually sort all of the shares on the London stock market by relative safety. We bring the safest stocks in the UK to the top of the pile. Remember, this is a hands-off methodology. We don't want to be looking at the market too often. We don't want the share to be giving us many surprises. The objectives and methodology is quite simple. When we get one of those green signals, we buy the 10 top relative safety stocks. So when the general market is rising, we are always fully invested. Now, when the market is rising, there's a very low probability that you'll get stopped out of one of those stops, and we provide a stop loss level for every share every day. If you were to get stopped out of a high RS stock and the market is rising, you simply run the VectorVest Uni search again and replace with the share that you don't have. So when the market is rising, we're always fully invested. Now, sooner or later, we'll print a sell signal. Markets are like living people. They breathe in and they breathe out. When we get a confirmed down, there's a higher probability that one of your high RS stocks will hit its stop loss. In this case, you get out, but you do not replace and build a cash position. So if, for example, we got a confirmed down and we were stopped out of 2 of the 10 shares that we're holding, we'd be 80% in equities, 20% in cash. When the next confirmed up signal comes, we run the Uni search again and we replace, so we're always fully invested when the market is rising. In that last little bit of turbulence, when we got a confirmed down that lasted a fortnight, we weren't stopped out of anything. The high RS stocks are exceptionally robust. However, in February, we were stopped out of the lot. That's the only time that that's happened since 2008. And we started again in April the 27th from a 100% cash position. We're after capital appreciation, obviously. We're after dividends. And if you're in an environment where you can sell calls, you can make income from selling covered calls on the shares that you've got. That's very difficult at the retail level in the UK, very easy in the US. And that's what happened last year, folks. The worry-free investing in 2019 had an exceptionally good year, and we only traded twice. That happened in August. So that little pullback in August, we got stopped out of 2 shares in that pullback. And the portfolio was up 45% in 2019. As I've just said, we got stopped out of pretty much everything we're holding in February, at the end of February, and gave back about 15% of that. So in the, 15 months between the start of 2019 and March 2020, we were up about 30%. Now, that's the VectorVest composite again, just as a refresher. And that's what it's done since the April 2020 confirmed up signal. The market's up 19% and the worry-free portfolio is up 29%, and there's been absolutely no trading whatsoever. Most of the shares, 9 winners, 1 small loser in the pack. So the worry-free investing technique doesn't trade that often. It trades in the UK's safest shares, those shares that have got a great mix, a sweet spot of safety and predictability of earnings and earnings growth. It's a great place to start your investment journey. If I was managing your money, and I managed money for high net worth individuals in the past, not here, but in South Africa, I would put probably 70 or 80% of your cash into worry-free, and the rest I would do some swing trading to try and increase the performance. That's me, David Paul, david.paul@vectorvest.com. If you would like to try VectorVest, then simply go to the VectorVest website, vectorvest.co.za. We have a Black Friday special, and you can try VectorVest for 30 days for a massive 99 pence. How's that? You've got my email address there, folks. If I can help you in any way, just send me an email. I'll get back to you as soon as I can. Thanks very much.